Good morning students, this is fund flow statement problem. It is very important for 15 marks. These kinds of problems will ask for your exams. So it is very important for 15 marks. Please concentrate on this. See the problem. From the following balance sheet of XYZ Limited, prepare fund flow statement for 2015. So here they have given the information. They have given the balance sheet information for 2 years. 31/3/2014 and for the 2015. So they have given the balance sheet for 2 years. Then they have given the additional information here. A part of land was sold out in 2015 and the profit was credited to capital reserve. So they have given the information here. I will solve the problem simultaneously along with the solution. See the solution. See, while preparing if they asked you to prepare the fund flow statement, there are 4 steps to prepare the fund flow statement. First one is the calculation of the schedule of changes in working capital. Then second is the preparation of the ledger accounts. Then third one is the calculation of fund from operation. That is 2 methods, statement method or adjusted profit and loss account, whichever you find easy you can use that. Then last step is the fund flow statement, that is calculation of sources and application of fund. So this is the 4 steps to calculate. These are the 4 steps to calculate the fund flow statement. Fund flow statement means you have to follow these 4 steps. So this one will be asked for 15 marks. It is very important. So first we'll start from the first step, that is calculation of schedule of changes in working capital. So before solving this problem, first you have to learn the format, then you will find it easy to solve the problem. So first step is schedule of changes in working capital. So particulars, they have given 2 years information, 2014-15, write that 2014-15. Then changes in working capital, increase or decrease. So here in changes in working capital, we want only the current assets and current liabilities information. So first is the current assets. So see in the problem, first we have to take the current assets. See here, goodwill, it is not a current asset. Land and building, no. Plant and machinery, no. Investment, see, if it is a short term, then it is a current asset. They have mentioned here long term, that means it is a fixed asset. Then sundry debtors. So sundry debtors is the current assets. How much is there? Here sundry debtors 70,000 and 85,000. So write that sundry debtors 70,000, 85,000. Next what we have, stock, that is the closing stock 39,000 and 55,000. So write that here, stock 39,000, 55,000. Next is the bills receivable. How much? 10,000, 15,000. Write that here, bills receivable 10,000, 15,000. Then cash in hand 7,000, 5,000. So cash in hand 7,000, 5,000. Then cash at bank. So this is also current asset, that is 5,000, 4,000. Write that cash at bank 5,000, 4,000. See, next is the preliminary expenses. See while calculating the statement of changes in working capital, preliminary expenses will not come, only the prepaid expenses. If prepaid expenses are then we have to record here, but preliminary expenses, this one will comes in adjusted profit and loss account, so it won't come. So we have recorded all the current assets. See here, we have recorded all the current assets. Write the total, make a total of these two. So total current assets, that is A. So here we got 1,31,000, here we got 1,64,000. Now we have to find out the difference, that is changes in working capital. If the current assets, see here, first one, sundry debtors, here 70,000 in 2014 and 15 it is 85,000. So there is an increase of 15,000. If current assets are increasing, means there is an increase in working capital. So difference 15,000 you have to write under increase. Next, stock, here 39,000 and 55,000. So there is an increase of 16,000. You have to write under increase. If current assets are increasing, means there is an increase of working capital. So next, bills receivable 10,000, 15,000. There is an increase of 5,000. So write under increase 5,000. Next, for cash at bank 5,000, sorry, cash in hand 7,000 and 5,000. So here it is a decrease. So decrease of how much? 2,000. So 2,000 you have to write here, decrease. Next, cash at bank 5,000, 4,000. Here also there is a decrease of 1,000. So write that 1,000 under decrease. So we are done with the current assets. Next you have to record the current liabilities. So see in the problem what and all current liabilities we have. Equity share capital, no, it is not current liabilities. Then redeemable preference share, no. Capital reserve, no. General reserve, no. Profit and loss account, no. Next, proposed dividend. So here proposed dividend is a current liability. So write that 21,000 and 25,000 here. Proposed dividend 21,000, 25,000. Then we have sundry creditors, that is 13,000 and 24,000. So sundry creditors 13,000, 24,000. Next, what we have here, bills payable, how much? 10,000 and 8,000. So bills payable 10,000 and 8,000. Next, liabilities for expenses. So it is also a current liability for the expenses. So that is 15,000 and 18,000. Write that here, liability for expenses 15,000, 18,000. Then provision for tax. This is also current liability. How much we have? 20,000 and 25,000. Write that here, provision for tax 20,000, 25,000. So we have recorded all the current liabilities. Next, make a total of this two, that is total current liabilities. We are considering it as a B. So total of this will be 79,000, total of this will be 1 lakh. Now we have to find out the difference, that is in whether it is increase or decrease in working capital. See, if current liabilities are increasing means that is a decrease of working capital. If it is decreasing means increase of working capital. So first one is proposed dividend. Here it is 21,000 and 25,000. Here it is increase of 4,000. If current liability is increasing means we have to record under decrease because the working capital will decrease. So 4,000. Then sundry creditors. So 13,000 and 24,000. Here it is an increase. That means we have to write under decrease. Current liabilities are increasing means the working capital is decreasing. Next, bills payable 10,000, 8,000. Here it is decreasing by 2,000, right? So if it is decreasing means we have to write under increase 2,000. Next, liabilities expenses 15,000, 18,000. That means here it is an increase of 3,000, write under decrease. Next is provision for taxation 20,000, 25,000. So here it is an increase, that means you have to write under decrease. So we have recorded all the items. Next is working capital. How to calculate that? A minus B, that is total of current assets minus total of current liabilities. So here under 2014, 1,30,000 minus 79,000, we will get 52,000. Next 2015, 1,64,000 minus 1 lakh, we will get 64,000. So which side is more here? Here it is working capital is increasing, right? In 2014 it is 52,000, in 2015 it is 64,000. It is increasing. So here it is more, right? That total both the sides 64,000. So the difference you will get here, that you have to record here. The difference is 64,000 minus 52,000, you will get 12,000. That is the increase in working capital. Because see here, 2014 it is 52,000, in 2015 it is 64,000. There is an increase of 12,000, right? So that's why we are writing increase in working capital 12,000. Next, see here, in changes in working capital, add the values. Here we are getting 38,000. So the difference here will be 12,000. So this difference and this difference should be equal. Then only our problem is correct. So it is 12,000 is the difference. So we have calculated the first step of the fund flow statement, that is schedule of changes in working capital. The second step is the preparation of ledger accounts.